Hey guys, it's Dan Peterson here with Mortgage Solutions LP. I'm here today to talk to you a little bit about what it might look like to qualify for a mortgage if your credit isn't quite perfect. What do I mean by that? I mean, if your credit isn't in that 680 to 700 or higher range, what options do you have to qualify for a mortgage and what that might look like? The first option obviously is to talk to somebody who's in the credit repair business, or let me take a look at your credit report and have a discussion with you and take a little time to work on your credit to see if we can get you up to the level where maybe you'd qualify for a conventional loan, but that's a video for another day. I could talk for an hour about that. What I'm going to talk about today is an FHA mortgage. What is an FHA mortgage? Who is it right for? What does it look like? What makes it different from a conventional mortgage? Those are all great questions that I get all the time. So an FHA mortgage is a Federal Housing Administration loan. It was brought about to help people who have credit problems, to help people who need to be able to put less money down. It came about in an era where 3% down conventional mortgages didn't exist. So the minimum down payment on an FHA mortgage is 3.5% down. It's very close. But the key difference on an FHA mortgage is you can go all the way down in some cases to below a 600 credit score and still qualify with that minimum down payment. Now, some of you are probably saying, well, why wouldn't I just do that every time? There are some downsides to an FHA mortgage. It is a great product. It does come with attractive interest rates. It does allow you to purchase a sizable home. In Central Texas, you're looking at a budget of up to the $400,000 range. So you can use it to buy a big home if you want. It's not like you have to buy something small. The real issue with an FHA mortgage is it comes with mortgage insurance for the life of the loan. That is a way for the Federal Housing Administration to ensure that they're insulated from risk, right? So even when you hit that 20% point in equity in your home, that mortgage insurance isn't going to go away unless you actually refinance the mortgage, pay the closing costs and everything to get into a conventional loan if your credit's where it needs to be at that time, for example. The other thing about an FHA mortgage is there's something called a funding fee. That funding fee is a 1.75% fee that's actually looped into your loan amount. You're not really going to feel it on your monthly payment, but you're definitely going to feel it when you go to sell the home in the future and you actually miss out on that chunk of equity that you would have had otherwise. So FHA mortgages are great if you don't have another option. They're really forgiving if you have issues in your past regarding your credit, right? Things like repossessions of cars, charge-offs, credit card debt and collections, things like that. You can typically get around them with an FHA mortgage within reason, things you couldn't get away with on a conventional mortgage. So just keep in mind that over time, even though there are those additional costs with an FHA mortgage, you're still building equity, you're still owning real estate, you're still taking advantage of that appreciation you're going to get over time, you're still building wealth. And so even if you're not going to have the ability to do a conventional loan, an FHA loan is still a great option for certain clients. Thanks so much for watching. If you'd like to learn more about how to get the best mortgage experience in Texas, check out my website at danpetersonmortgage.com or send me an email at dan@mortgagesolutionslp.com.